Friends, I welcome you to the series on the BCBF program. Now, today's topic is on the retail loans. So, retail loans, generally the bank activity is to take deposits from the public and to lend to the public again. We are only doing the intermediary work. Okay. But when we take the deposits, so we'll give it to the public for giving the loans also. The loans are of two types, to the individuals and to the corporates. For individuals again, based on for the consumption needs and for production activity also. The consumption loans, they are essentially, they do not generate any income on their own. Whereas for the enterprising or business enterprises, they'll generate income. But the retail loans, basically, they are only for consumption or for their luxury purpose, they'll be using these retail loans. During the last 2.5 decades, there is a lot of stress on the retail credit. So every bank wants to generate retail credit portfolio for their income generation because it's a very stable income. And the retail credit, why banks are insisting on the retail credit? Because the income of the general public, it's increasing in general. Last 2.5 decades, the income of the farmers, employees, and the income of other business people also, it's growing. So with that income generation, additional income generation, people want additional assets. Maybe they want a house, they want a car, maybe they want a vehicle, or maybe they want to buy certain consumer articles. So with this retail credit portfolio of the banks, it's increasing gradually. In addition to this, the population is the youngest population in the country is growing fast. The population of India is, I think, it is the youngest population in the world. In the age group of 18 to 35, 40 years, the age group is very prevalent in India. So this younger generation, their attitude is to buy now and pay later. Not like Indian mentality, earlier Indian mentality that save now and buy later. That culture is no longer existing now. Now this younger generation, they want to buy now and pay later. So that culture is gradually developing. That's a Western culture is gradually developing in India. So with this, the consumerism is also growing. So everybody wants to buy certain articles. Maybe everybody wants to have his own house, his own car, because it's a status symbol to have a vehicle or to have a own house. So that is a status symbol. And in addition to this, government is also giving a lot of focus for the home loans. They are giving a lot of concessions. They are giving a lot of tax benefits, maybe for ATC benefits or income tax benefit, or the interest on the housing loan is also exempted to certain extent, up to 2 lakhs is exempted. So with this, lot of push is coming to the home loan sector. And everybody wants to buy house because the government is giving focus and they want to satisfy their own lifestyle, because everybody wants to have one house, one car like. So even my neighbor is having a car, so I also want to have. My neighbor is having a vehicle, the house, I also want to have. So the desires are growing. So with this, what is happening is banks are pushing more and more for the retail loans. And earlier, probably our previous generations, they used to be joint families. In one house, there used to be my great grandparents, grandparents, parents, and children. All were staying together. But now with the newer jobs, people are shifting to different locations. Now the nuclear families, only husband, wife, and children. So only nuclear families are increasing. With that, now they want a house individually for the nuclear family. Earlier, only one house used to be sufficient for 10 families. Now, one small family of 4 people, they want to have one house. So the traditions, the cultures are changing gradually. So let us see what are the retail credits actually. What are the things that are included in the retail credit? Main focus, 50% of our the retail loans, it is from the retail housing loans. Banks are focusing on the retail housing loans because there about 50% of our retail loans belong to housing loans, and the 30% is the vehicle loans. The 30 and 50%, 80% is only two segments they constitute retail loans. The rest all maybe consumer durables, finance against consumer durables, the credit cards and education loans, and loan against properties, personal loans, gold loans, and several other schemes are also there. But the majority is housing loans and vehicle loans. You call it as a auto loans or you call it as a vehicle loans. So these are the major segments in the retail segment. Okay. Now, who are the target groups for the retail loans? All your salaried class, all your employees, maybe government, state government employees, self-government, central government employees, or quasi-government employees. All are the employees who are working in the public sector undertakings, who are working in the private sector undertakings. All employees that are all eligible for the retail loans. In addition to this, self-employed people, maybe small carpenters, maybe they're small business people, small grocery shop people, or maybe doctors, architects, maybe your lawyers. All these people are eligible for the retail loans. For vehicle loans, again, same people again, salaried and self-employed are the target group for the retail loans. And personal loans, mostly essentially these personal loans are given to the salaried class. But in some cases, some banks, they are giving to the self-employed people also. And traders and small traders and business people also, they are giving. But essentially, the personal loans are given to the salaried class. 90% of the loans of personal loans are given to the salaried class. Okay. In addition to this, credit cards, maybe they're salaried class again, and self-employed professionals, traders, businessmen, and corporate accounts. Everybody, they are giving the credit cards. So these are the essential target groups for the retail loans. So let us see what are the general in the retail loans. Banks use certain terms. So I would like to familiarize you with those terms. First is equated monthly installments. Equated monthly installments means the installments are common throughout the period of the loan. Suppose if a borrower has taken a loan, housing loan, the installments are common throughout his life. That is, suppose if the loan is for 20 years, the installments are also equally divided in the 20 years. That is the equated monthly installments. And fixed rate of interest is throughout the period of the loan. Suppose he is taking a loan today, next 5 years, the loan interest is same. It will not change at all. Suppose as on date, it is a 9% rate of interest. So that will continue till the loan is repaid at 9% only. So that is a fixed rate of interest. And again, floating rate of interest, every once in a quarter, some cases, once in 3 months, or in some cases once in 6 months, or once in 1 year. So they'll be changing the rate of interest, linking to certain rate. So it could be the MCLR rate, bank's MCLR rate, or it could be MIBOR rate, or it could be LIBOR rate. So they will be changing depending upon the change in the rate of interest. So the rate of interest is changing depending upon a benchmark rate. That is the floating rate. Flat rate of interest is, today suppose he has taken a 1 lakh rupees. They will be charging interest for the entire 1 lakh rupees for the entire period. Suppose a 5 years period they have given. For the entire 5 years, on 1 lakh rupee, they will be charging rate of interest. Here, not on the, suppose you have paid 10,000, 10,000, 10,000 like this you have paid. They will not consider that. They will be charging interest on the initial amount sanctioned, initial amount disbursed. Suppose 1 lakh is disbursed today, they will be charging interest on the 1 lakh irrespective of the person who has paid it or not. They'll be charging rate of interest. This, in fact, this is most of the private NBFCs, they'll be charging flat rate of interest because they want to attract the more customers. They'll be giving the flat rate of interest because if they offer floating rate of interest, that will not work out for them. Flat rate of interest, if they convince okay, banks are giving at 11%, I'm giving you a flat rate of 9%, you come to me. So the NBFCs will be more and more focusing on this, offering this rate. But in the process, the borrowers are losing because they'll be paying on the full amount of original amount sanctioned, not on the reduction basis. But banks charge interest on the reduction basis. That is advantageous to the banker, these borrowers. But the NBFCs, they'll converse for the with this offering the flat rate of interest or lower rate, but they do not know what will be the implications on that. Okay, and the front-ended interest is they'll be charging interest upfront. Suppose they are releasing 1 lakh rupees today, they'll be charging interest for the entire 5-year period today itself. Got it? For the entire amount, that means 1 lakh rupees is loan. For 5 years, suppose it is the rate of interest is 30,000 rupees. They'll take upfront 30,000 rupees and release only 70,000 rupees. In the books, 1 lakh rupees is there, but 30,000 already they have taken. This is the front-ended interest. And one more, certain other terms I am using it in the next slides. Gross income is total income, total salary. Suppose if employee is there, as per his pay sheet, what is the total salary? Gross salary. So that is a gross salary. And take home pay is, suppose an employee has taken certain loans, he has to pay installment on that. So after the deduction of all these installments, whatever is the amount left over, that is called take home pay. Got it? So gross pay, gross income, take home pay. Example, suppose an employee total income is 25,000 rupees. His deductions are about 15,000 rupees, all the loan installments, 15,000 rupees. Maybe is vehicle loan, housing loan, maybe is PF loan or income tax. All these deductions put together about 15,000 rupees. So net take home pay means how much he is taking to the home. After reduction of all the installments, it is 10,000 rupees is the net take home pay. So percentage of take home pay is, so if you divide by 10,000 rupees, divide by 25,000 rupees, it comes to 40%. In all our retail products, we consider the take home pay as a criteria for installment fixation or repayment fixation. All the banks will be considering this take home pay as a criteria for fixing the installment. Okay. Then what is the process here? First, you take an application form. Banks will be taking an application form for each purpose. Maybe if it's a housing loan application form is separate. Vehicle loan means vehicle loan application form is separate, like this. Education loan means education loan application form is. So whatever is the application form, relevant application form, they'll be giving it. They'll be filling it in along with the 2 passport photos. They'll be giving it to the bankers. Plus, in addition to this, banks will be collecting certain other documents also along with the application form. What are the documents? They'll be taking income tax returns. Some banks take 2 years income tax return, or some banks take 3 years returns. Okay. They'll be taking passport copy in the case passport is available, passport for address proof, identity proof. They'll be taking passport. They'll be taking salary slips. Last 6 months, what are the salary slips? What are the salary slips they'll be taking? Plus, they'll be taking PAN card compulsory. They'll be taking Aadhaar card. They'll be taking employment certificate also for how long that a borrower is working, that applicant is working in a particular organization. So this will give the information how the applicant, whether he is working for the last 10 years, 1 year or 2 years, so that will give an information. In addition to that, bank statement, whatever is the bank statement, his own bank statement, where his salary is credited or where his income is credited. So those things, a bank statement, most of the banks, they take it for 1 year. Some banks take for 6 months also. So this will give you an information where the salary is credited, how much salary is credited, and what are his savings from that salary, and what are his deductions, how many installments are going, how many EMS are being paid, whether he is paying on time or not. All these things will be considered in the bank statement. Then assets and liabilities, what are the assets and liabilities, what are his loans, what are his properties, all those details will be given in the assets and liabilities. Then in addition to this, suppose if he is taking for a housing loan, that valuation of that particular property, particular house, will be taken by the from the approved valuer of the bank. And legal certificate also they'll be taking. They'll be verifying the records of the whether the particular title deeds are correct or not, whether the borrower or whether the seller is having that title for selling it or not. All those details will be verified by the advocate, and he will give an opinion on that. And suppose if he is buying the applicant is buying a vehicle, so for that vehicle he is submitting a quotation from an authorized dealer. So suppose if he is buying a house, for that the agreement is maybe flat or house or plot, whatever is that, he is entering into an agreement with the seller. So that the copy of that agreement will be taken here. So all these documents are essential for considering the proposal. So these are essential. After taking the proposal, then the banks will be having a personal interview with the borrower, that applicant. What is to cross-check the information, whether the information given in the application is correct or not. Those details will be checked there. During the interview process, he will interview the applicant. What are his family sources? What is his income? Everything, all the details will be considered during the interview process. Then they'll be taking they'll go to the his employer's residence, employer's place also. They'll go to their residence also. They'll verify whether there is information given in the application or not. Those those details are also verified by the bankers. Then they'll go, when they inspect the house, they will find out how the living standards of that particular person, whether he's having a TV, whether his house is well or not, where he is staying. All those details are given in this visit report. And economic viability report, so there they'll be considering what is his total income, how many installments have been deducted, so what is the loan position, what is the net take home pay, what is the gross take home pay. All those details will be considered. Based on that, banks will be considering a proposal. Then after satisfying all these things, they'll issue him a sanction letter, and then they'll verify the property details also. They'll be verifying legal certificate also. They'll be verifying. Then after satisfying all these issues, then they will give a sanction letter. They'll complete the documentation, and they will register the property documents also. Then all the documents will be signed. Then they will disburse the loan. So this is the process for generally for the retail loans. Then let us discuss about education loans. Why the banks are considering education loans means nowadays the education has become very, very expensive, very costly. To study a engineering course, it requires 10 lakh rupees. Suppose you're a doctor, it requires 50 lakhs rupees. A CA, it requires about 4-5 lakhs rupees, like this. But the income of the people is not sufficient to take care of this. So they'll borrow from the banks to complete this education. Who are all eligible in this? You should be an Indian national. You should be Indian citizen. Then only he is eligible for taking a house education loan. And he must have secured an admission in the college or institute. What are the courses eligible? All your post-graduation like BA, BSc, MSc, MCom, all these courses are eligible. And apart from that, your CA professional courses like engineering or doctor or CA, all those courses are also eligible. And special courses, special professional courses like your IITs, IIMs, and reputed institute like XLRI and Bajaj Institute, XLR, NIFT, all those reputed colleges are also, they will be securing an admission. And some highly specialized programs like aeronautical engineering, pilots training, shipping, all those courses are also eligible for taking a loan. Then some people may go to out of country also for studying. Maybe they can go for MS, or they can go for MBA, they can go for MCA also. They'll and apart from these courses, they can go for some job-oriented courses are also there in outside the country. For those courses also, the banks can give finance. But how much we can give? What is the expenses we can consider under the housing loans, these education loans? We can consider. We can give everything under this education loan, including a fee for the college, hostel fees, boarding, lodging, their expenses, their computers, their books, stationery, all these items can be considered under education loans. How much we can give? There is no restriction on the amount. Up to some banks have given up to 75 lakhs also for education loans. But for considering under priority sector, only 10 lakhs is eligible. Up to 10 lakhs loans are eligible to be considered in a priority sector. The rest all you can give. Banks can give any amount of loan. There is no restriction on the amount depending upon the requirement. Banks can give any amount. Up to 4 lakhs, no margin is required. No margin, without margin, banks can give. Above 4 lakhs, suppose if the education loan is being given for the studies in India, 5% only is a margin, and outside the country, it is about 15% is a margin. Their own contribution should be 15%. Security, what is the security? Up to 4 lakhs, no security is required. Up to 4 lakhs, if the loan is 4 lakhs, no security is required. Above 4 lakhs to 7.5 lakhs, one personal guarantee is sufficient. Personal guarantee, no mortgage is required, nothing is required. Above 7.5 lakhs, maybe it's the borrower has to give a fixed deposit, or they can give a pledge of mortgage of the house or any of the property they can give as a security for the above 7.5 lakhs. Security is a must. And repayment is, they've given a convenient, very easy installments after completion of the course. Suppose if the borrower, the applicant is going for 4 years, then after 1 year, that means from 5th year, giving a moratorium of 1 year, they can start the installments after 5th year. They can continue up to 15 years. 15 years, there's a long period they have given to pay them in installments, in convenient installments. And what is the rate of interest? It depends from bank to bank. It varies from 10%, 11% to 12% also. The per annum, the banks are considering, depends on bank to bank. Okay, one additional benefit is during the study period also, the borrower, they have the income, they can pay the interest and they can get income tax benefit also on that. And apart from that, there is a concession of 1% payback by the bank itself. So there is a benefit to the borrower. And for personal loans, another category is personal loans. Suppose I require urgent money for some my purpose, maybe for some urgent educational purpose or urgent emergency purpose, I require some money. No other purpose is required. Here, banks can consider up to 5 lakhs rupees also. Some banks are giving more and more amount also. Here, the period given is up to 5 years, the banks can give the period. Here, no purpose is required. For my own purpose, the banks are giving the loans. Here, mostly they are giving for the salaried class or wherever the income is assured. Every month they have the income. Those people also are eligible for the personal loans. Even for business and professionals also, some banks are giving. Some banks give up to 5 lakhs rupees for the emergency personal loans. And here, the income of a spouse or maybe son, the income also can be clubbed together to arrive at the personal loans. And here documents required are, again, whatever documents we have listed out, that's the application form, the income proof, residential proof, PAN card, KYC, all these applications. In addition to that, employment certificate, all those details are required. And the security required is some banks, depending upon the net worth of the borrower, the banks are also taking 1 or 2% personal guarantee. Another segment is housing loans. This is a major segment of the retail loans for the banks. For what are the purposes we can give? For purchase of the plot and construction thereon. Not only for plot we don't give it, for purchase of plot and construction of a house there, or purchase of a new flat, or purchase of a old flat, or the renovation of the house. So all those activities can be considered for the housing loans. Some banks are giving top-up loans also for existing houses. So what is the amount here? It varies from bank to bank. Some banks are giving up to 5 crores also on this. There's no restriction on this. But only the criteria is to be considered under priority sector. As we discussed in the last class, the priority sector classification is up to 35 lakhs loan with a total cost of 45 lakhs. The cost should not be more than 45 lakhs and the loan should not be more than 35 lakhs in cities, metropolitan cities. And in other cities, it is 35 lakhs is the total cost and 30 lakhs, 30 lakhs is the cost and 25 lakhs is the loan. Other cities to be considered in the private sector. But outside the private sector, banks giving any amount. There is no restriction on this. What is eligibility here for salaried class again? Up to some banks are giving up to 6 times. That means 6 years salary also they can give. That's my 60 months salary they can give as a housing loan up to 60 months. Or some banks are giving 72 months salary also. And if it is a professional and self-employed, up to 3 years income they can be considered for the housing loans. Based on the income tax returns, they will be filing. That income also can be considered. What are the documents again? All these documents, whatever we listed out earlier, all those documents are required. Here you take a property valuation certificate, legal title certificate, all those documents are required. And the security is mortgage of the house. Here mortgage of that, whatever the plot or house and a flat, all those properties are mortgaged. Whatever loan has been given, that asset has to be given as a security. Okay. And another segment is vehicle loans. So banks are giving loans for purchase of two-wheeler. There's a mobike or scooty or whatever is that, they'll be giving loans. And four-wheeler also they'll be giving. They can give a new as well as old also. For a second-hand vehicle also they'll be giving. There's no restriction on this amount. Okay. Up to, depending upon the income of the applicant, up to 7 years the repayment can be given. But only second-hand vehicles, only 3 years loan repayment can be given. And here only 65% of the cost of the vehicle is given in the second-hand vehicle, not more than that. So when I say this is a cost includes total on the road, including insurance, everything, that is a cost. Again, for whom we are giving these loans? For employees or salaried class, maybe business class, everybody we are giving these loans. And here when we club the income, we arrive at the income, club the income of his son. Suppose if the applicant is a son, so his father income can be clubbed, or his mother income can be clubbed, and or his son income can be clubbed, or wife income. So this income of these dependents can be clubbed together. And what are the documents we require here again? Same documents what we have discussed again. That is the income proof, KYC documents are to be taken, plus a PAN card, Aadhaar card, plus your quotation on the asset to be purchased, maybe vehicle, car or motorbike. And what is the security here? Hypothecation of that vehicle is a security here. And another segment is a consumer finance. So similar is the case here for purchase of maybe electronic goods, maybe TV or white goods like your washing machine, all those things can be considered under this. Okay. So these are the general consumer finance. Again, we will be doing it. And now we have come to the end of that session. I'm just discussing you a couple of questions here. So which one of the following products is not a retail loan product? Vehicle loans, term deposits, personal loans, home loans. Which one is not correct one? So term deposits is the, okay. So term deposits is not, it is a deposit, not loan. So it is the correct answer. Second one is the fixation of prepayment period. On which criteria it is dependent? On the minimum take home pay after all deductions that will be considered as a for the purpose of repayment installment fixation. So these are the retail loans. So let us come to the end of this session. So in the next session, we'll be discussing some other subject. Thank you, friends. Best of luck to you. Okay.